Our top business story this morning is that the US Fed Reserve has kept interest rates at its target range, so on hold. Policymakers claiming they still expect 2 rate cuts this year, though. The central bank forecasting higher inflation and slower growth in the American economy than it had previously predicted.
Well, you've got high readings for goods inflation after a string of readings that average close to zero. And you have to ask, it's coming during tariffs, but you can't. It's very hard to actually scientifically go back and match up those increases and say, yes, I can prove that that's from tariffs, but it kind of has to be to some extent.
Joining us now is the founder and chief executive of Stockspot, Brycki. Chris, good to see you this morning. So let's begin with that breaking news from the Fed Reserve and its outlook, which kind of appears somewhat grim. What's your view of it?
Yeah, that's right. It's the first time, Pete, that they've really acknowledged the potential impact of these Trump tariffs. And as a result, the forecasts for growth have been pulled back from just over 2% to 1.7%. But at the same time, inflation forecasts in the US have been increased. And so there's a real concern that there's going to be a stagflationary outlook now for the US. The US market didn't mind, though. It was up about 1% overnight, just on the view that these comments from Powell were a bit more dovish than people expected, and they still hope for 2 rate cuts this year.
Yeah, it's interesting that. Yeah, so a positive response on the S&P. Would that be the same here today, do you think?
Look, you often see our market follow through with a similar result, but I think what we've seen over the last couple of weeks is that bank stocks and resource stocks have been really dragging our market down. So we often open on our highs and then float down during the day. So we'll really rely on sort of buying coming into the market to keep our market propped up today.
Yeah. So that outlook from Jay Powell, inflation staying longer, growth really slow. I mean, how does that compare to our outlook?
Look, the outlook in Australia isn't too different. Our RBA recently pulled down their outlook for inflation, expecting it to now come down into our target range. Unemployment's going to continue to rise slightly in Australia, they expect, and growth as well here is going to be pretty subdued. So I think it's a similar outlook here. Obviously, our RBA cut rates last month, but it was a little bit more cautious to provide any further outlook of more rate cuts here.
Hey, Chris, just a final one here, and an interesting dilemma is in the works. The federal government is going to be announcing cheaper medicines today, and it's actually because of the PBS that the Trump administration wants to increase tariffs on US imports of our pharmaceuticals. So is now a good or bad time to have pharma stocks?
Look, I think it's going to be difficult for companies like CSL after these big US medical giants have complained basically that our PBS is unfair and, really targeting the intellectual property of these US businesses. Obviously, the Trump administration at the moment is looking for any places globally where they feel like US companies are getting it tough compared to the local businesses. And this is now an area that they're looking at. Obviously, pharma in Australia is one of the big exports we have to the US after, I think, beef and gold are number 1 and 2. So for companies like CSL, one of our big exporters, if these tariffs were to be placed on pharmaceuticals, it definitely wouldn't be a good thing.
All right, Chris, good to see you. Thank you. We'll chat again soon.